Inflection point, crossroads, watershed moment. Whatever you want to call it, it has arrived for the market. Investors are looking for clarity on two major issues, interest rates and trade. This week, the Federal Reserve policymakers meet to decide whether now is the time to lower the benchmark rate. Most say it is not, but some say it is. The market wants a rate cut. Some economists argue it's not necessary. If a rate cut doesn't come at this week's meeting, investors will be looking for clues as to when it will, given the escalating geopolitical and trade tensions as well as slowing global growth. And with that as a backdrop, investors were in wait-and-see mode today. The Dow Jones Industrial Average rose 22 points to 26,112. The Nasdaq added 48, and the S&P 500 was up 2. Bob Pisani starts us off tonight from the New York Stock Exchange.
Stocks are off to a quiet start so far, but there's no shortage of market-moving catalysts to come in the week ahead. That's what's important. Trade talks in the Federal Reserve will be front and center all week, with President Donald Trump set to meet with Chinese President Xi Jinping next week at the G20 meeting in Japan. But earlier today, Commerce Secretary Wilbur Ross downplayed prospects of a major trade deal getting done.
Very hard to put timetable on things. I think that we will eventually probably make a deal. But if we don't, the president is perfectly happy with continuing the tariff movements that we've already announced, as well as imposing the new ones that he has temporarily suspended.
We saw trade-related sectors like semiconductors, materials, industrials, all weaker today generally as a result of that. On the flip side, we did see some strength in communication services like Facebook, Netflix, and Google parent Alphabet, all turning around a bit. The other big issue for the week is the Federal Reserve. They kick off a two-day meeting on interest rates tomorrow. The question now is, can the Fed set the stage for a new easing cycle when it meets on Wednesday? Many traders are expecting Fed Chair Jay Powell to leave the door open for a rate cut later this summer, maybe even next month, without sounding the alarm about a global economic slowdown. It won't be easy to get the tone right on that. Right now, interest rate sensitive groups like utilities and real estate are essentially at historic highs as rate cuts make them more attractive investments for investors who have been starving for yield. Later in the week, by the way, we'll also get key data on housing and manufacturing, both of which will paint a clearer picture of just how healthy the economy really is. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.